My name is Anthony Potter, and I am the Manager, Corporate Disclosure and Financial Analysis. For those of you I haven't worked with, I am relatively new to the ASC, having previously been in industry as a CFO for several international public companies, and prior to that, in audit. I'll provide a brief regulatory update, and in that regard, I've added our mission statement here, as that is what ultimately guides policy. For today, I'm going to focus on a few ongoing projects that directly impact raising capital, and then briefly cover some recently issued notices that you should be aware of. The Reducing Regulatory Burden Initiative is comprised of several project streams, and for simplicity, I've categorized these into two general categories: raising capital, which includes WICSI and LIFE, and other initiatives, such as the proposed annual and interim disclosure statements. Several other burden reduction projects have already been completed, which are not shown here, and I'll briefly highlight those later in the presentation. WICSI stands for Well-Known Seasoned Issuer and permits a category of larger WICSIs in Canada to file a final base shelf prospectus and obtain a receipt the same day, with no requirement to file a preliminary base shelf prospectus. Each CSA jurisdiction issued a temporary blanket order to facilitate the WICSI regime, which took effect on January 4th, 2022. At this time, we've had a number of WICSI filings in Alberta, and CSA staff are currently working on proposed amendments to National Instrument 44-101, short form prospectus distributions, and National Instrument 44-102, shelf distributions, to implement the WICSI regime on a permanent basis. The second initiative shown here is the Listed Issuer Financing Exemption, or LIFE, which introduces a new prospectus exemption for qualifying listed issuers to distribute freely tradable listed equity securities to the public up to a specified dollar amount. The Listed Issuer Financing Exemption came into effect on November 21st, 2022, and should be of interest to smaller issuers by providing a more efficient means of raising capital. For example, in addition to not having to file a prospectus in order to issue free trading listed equity securities, issuers can choose to conduct the offering on their own or through a dealer. While there are certain restrictions to using the exemption, in general terms, to qualify, the issuer must be a reporting issuer that has securities listed on a Canadian stock exchange and have filed all timely and periodic disclosure documents. The issuer's CD record is supplemented by a short offering document. Subject to exchange policies, issuers can distribute freely tradable listed equity securities to the public, and the amount that can be raised under the exemption in a 12-month period is limited to the greater of $5 million or 10% of the issuer's market capitalization to a maximum total dollar amount of $10 million. As mentioned, there are a few limitations, but they are relatively straightforward, and most issuers should be able to determine in short order if they qualify to use the exemption. For example, the issuer must be a reporting issuer for the last 12 months. During the last 12 months, the issuer has not ceased operations, or the issuer is not an issuer whose principal asset is cash, cash equivalents, or its exchange listing. The issuer is not an investment fund, a capital pool company, SPAC, growth acquisition corporation, or similar. In addition to the dollar amount that can be raised, there is a limit on the amount of dilution that can occur as a result of using the exemption. Last, the type of security that can be issued has been limited to listed equity securities that are commonly understood, like common shares and units comprising listed equity securities and warrants. Subscription receipts, special warrants, and convertible debentures cannot be issued under the exemption. In terms of the use of funds, there are restrictions for situations where the existing continuous disclosure record may not be complete, such as a significant acquisition where a business acquisition report needs to be filed, or in a restructuring transaction where a filing statement or information circular may be required to fully understand the transaction. Similar to the prospectus requirements, issuers must ensure that they are raising sufficient capital in order to meet their business objectives and liquidity requirements for 12 months. In the offering document, there is a section requiring the issuer to describe its business objectives and milestones, available funds, and the use of available funds. How funds from previous financings were used must also be explained. Certain documents will need to be filed in a timely manner. And two key items to highlight here is that in order to use the exemption, all material facts must be disclosed, and both the CEO and CFO must sign the listed issuer financing document. Those items are important as there are liability considerations to using the exemption. The CEO and CFO are required to certify that all material facts have been disclosed and the documents filed do not contain a misrepresentation. Should there be a misrepresentation, purchasers will have a right to rescind their purchase or a right to damages against the issuer. The listed issuer financing document will be considered a core document under applicable Canadian securities law, and as such, the issuer will be liable to purchasers under the secondary market liability provisions if there is a misrepresentation in the documents certified by the CEO and CFO. Moving on to other projects, amendments have been proposed to National Instrument 51-102 that would streamline the disclosure requirements currently set out in the MD&A and annual information forms. They would combine the financial statements, MD&A, and where applicable, the AIF into one reporting document. Create an interim disclosure statement that combines the interim financial statements and MD&A and address current gaps in disclosure. The committee is currently finalizing its work on these proposals and considering interdependencies with the Access Equals Delivery project. On the Access Equals Delivery project, consideration is being given to modernize the way documents are made available to investors and reduce the costs associated with the printing and mailing of documents. The proposed model contemplates providing public electronic access to a document, and alerting investors that the document is available will constitute delivery for prospectuses under securities legislation. Feedback on the proposal was mixed, especially in relation to continuous disclosure documents, and the committee is currently considering next steps. For the modernization of prospectus filings for investment funds, the CSA has published proposed amendments to the prospectus rules that would allow an investment fund in continuous distribution to file a new prospectus every 2 years rather than every year. No change would be made to when fund facts and ETF facts must be filed and delivered. The amendments would also eliminate the requirement for an investment fund to obtain a final receipt for a prospectus within 90 days of the preliminary receipt. Like the Access Equals Delivery project, comments are currently being reviewed and considered by CSA staff. As previously mentioned, a number of projects that fell under the Reducing Regulatory Burden umbrella have now been completed, including revisiting the primary business requirements, the bar requirements, and at-the-market offerings. If you have any questions with respect to these changes, please do not hesitate to reach out to us. Moving away now from reg burden projects, in October 2021, the CSA published a proposed climate-related disclosure rule based on the recommendations of the Task Force on Climate-Related Financial Disclosures, with certain omissions, such as a requirement for the disclosure of Scope 3 emissions and scenario analysis. The CSA's proposal, which would introduce climate-related disclosure requirements for reporting issuers other than investment funds, is modeled on 4 core elements in the TCFD recommendations relating to governance, strategy, risk management, and metrics and targets used by an issuer. Since publication of the CSA's proposed climate-related disclosure rule, both the SEC and ISSB have proposed rules and standards, respectively, for specific climate-related disclosures. Between the three proposals, there are some substantial differences, including to what extent Scope 1, 2, and 3 greenhouse gas emissions are disclosed, the use of scenario analysis and transition plan disclosures. The CSA is currently revisiting what a final Canadian rule would look like. In terms of recently issued notices, I'll provide some key takeaways on each of the notices in order shown here, but I would highly recommend taking some time to read each of these, all of which are available on our website. In November, the CSA published Staff Notice 51364, which is a biennial report on the results of continuous disclosure reviews conducted by CSA staff. As noted earlier, our CD reviews primarily focus on disclosure requirements, including those under National Instrument 51-102 and compliance with IFRS. The notice summarized key findings and outcomes for the fiscal years ended March 31, 2022 and 2021. Key takeaways include that 61% of review outcomes required issuers to improve and/or amend their disclosure, refile a previously filed document, or to file unfiled documents. The notice also included observations with respect to hot topics, such as credit risk exposure and deficiencies regarding disclosure by early stage issuers, as well as observations and guidance pertaining to the disclosure surrounding non-GAAP and other financial measures. On that topic, you can find a series of webinars in the Issuer Toolkit section of the ASC website. In October, the CSA published its 8th annual review of public disclosure regarding women on boards and in executive officer positions. Subject to certain exceptions, issuers listed on the Toronto Stock Exchange and other non-venture issuers are required to provide disclosure on an annual basis in the following 5 areas: the number and percentage of women on boards and in executive officer roles, targets, director term limits and mechanisms for board renewal, written policies relating to identification and nomination of women directors, and consideration of the representation of women when nominating and making appointments. As per the review, participation continues to trend up, as shown here. In October, the ASC also issued a news release showing that similar trends are also being seen in Alberta. For example, in Alberta, 82% of companies have 1 or more women on their board, compared with 80% in 2021 and 46% in 2015. And 45% of board vacancies were filled by women in 2022, an increase from 34% in 2021 and 25% in 2017. With respect to the self-certified investor prospectus exemption, while a few key takeaways are shown here, more information about the exemption and amendments will be provided later in today's presentation. Finally, the notice pertaining to ESG-related investment fund disclosure describes some of the most common ESG strategies that funds incorporate into their investment decision-making processes, such as negative screening, thematic investing, and impact investing. The notice also describes some observations and common deficiencies noted in reviews. For example, that funds lack detailed disclosure about the specific ESG factors that were considered by the fund. That wraps up the regulatory update section, and thank you for attending today's presentation. I will now turn the presentation over to our innovation and finance team.
Thank you very much for joining us today. I'm going to take a few minutes to talk about a relatively new prospectus exemption that can be used by a publicly listed company that is looking to raise capital. The self-certified investor exemption, it's very easy to use. And when it's used by a company that has shares listed on a Canadian stock exchange, there are no investment limits applicable to the investors. My name is Tanya Fleming, and I lead our innovation and finance team in the corporate finance department at the Alberta Securities Commission. I'm here with my colleague, Meg Hiles. Meg will be monitoring the questions, so please jump in at any time. Don't wait until the end. Meg and I are both lawyers and have been involved with capital raising as legal advisors. I've spent the majority of my career in industry as general counsel and vice president with listed companies. So I've also been involved in spending the money that we've used to grow our business. One of the things we do in the Innovation Finance Group is to engage with market participants and seek feedback on how the ASC can support the process of raising capital in the province. And one of the themes that we often hear about is the desire to democratize investing. So allowing people who do not meet the accredited investor income or net asset thresholds to participate in investment opportunities that in the past have really been limited to accredited investors. So anytime a company is raising capital by issuing shares without going through a full prospectus process, they need to rely on a prospectus exemption. The self-certified investor exemption is relatively new, and we're trying to test it in the market for a specified period of time. It was first introduced in March of 2021, and then based on market feedback, we amended it this past summer. It expires in the spring of 2022, so this next year is actually really important in deciding whether it will continue to exist and in what form. While we anticipate this exemption is certainly of interest to private companies, a company that's listed and is doing a prospectus exempt capital raise can use this exemption alongside other exemptions being used. And in that case, when the company's filling out its report of exempt distribution, 45106F1, you would simply just fill in that you've used the self-certified exemption, and because there's a qualifying criteria associated, you provide the paragraph number of the qualifying criteria. So this exemption is available to Alberta companies who are looking to raise capital from investors in Alberta and Saskatchewan. So those are the two provinces that participated in this pilot project. And then this fall, Ontario actually came out with a similar exemption for Ontario-based companies and Ontario-based exemptions, or Ontario-based investors. So Ontario-based companies and investors. And because securities law is under provincial jurisdiction, one of the challenges that we have is trying to harmonize across the country, which obviously makes it easier for companies who are looking to raise capital from investors in different provinces. And while the exemptions are similar, there are some important differences. And one of the things that Meg and I would like to do is speak with people who've used the exemption, the Alberta exemption, are interested in using the exemption, and would like to just talk to us and explore some of the differences between the Alberta exemption and the Ontario exemption. We want to get the right balance between market efficiency and investor protection. So if you are interested in chatting with us, if you put your name and contact information into the Q&A, we'll circle back and we'll follow up with you directly, and we'd be really interested in doing that. So this exemption is meant for investors who aren't accredited investors. So again, they don't meet the income or net asset thresholds, but they do have a certain level of financial acumen. And it's set up so that a self-certified investor is treated in a generally similar manner to an accredited investor, investing alongside accredited investors.
Tanya, I'll just jump in now with a couple of questions.
Sure.
So one person asked kind of what is the long-term plan for this exemption or the hope for this exemption? And so kind of like Tanya alluded to, harmonization is obviously an ultimate goal for us usually. So we at the ASC would like it to become a national initiative if possible. We like this exemption, but we just have to kind of see how other jurisdictions respond or if they're open to the exemption. The fact that Ontario is come kind of on this train is probably a good indication that people might be open to it. But yeah, that's part of why we're so looking for feedback so that we can see if people are interested. And then another question, which kind of ties into Anthony's presentation earlier, was that there was what are the recent amendments that happened in July, and those were actually done to make it more in line with the accredited investor exemption. So a couple of those were allowing for resale, which previously was not allowed under the exemption, and also just expanding on the SPV concept, which was allowed previously under the exemption, but now it's been expanded and made more clear. And then also some of the financial thresholds that are present in the exemption were removed for those guys. So we won't get into that a ton on this presentation, but those are some of the changes.
Excellent. Thanks, Meg. And as Anthony and Denise also mentioned earlier, we're going to do another session on the self-certified exemption in February, where we'll get into a bit more detail. So for this one, we're really just going to touch on mostly on its applicability to be used by a public company. So if we just flip to the next slide. So the first step when you're using this exemption is to have a look at the qualifying criteria. So an individual who wants to invest must be able to certify that they meet specific criteria. And actually, let's flip to the next slide and then we'll come back to this one. So the qualifying criteria are meant to indicate some level of financial understanding. So someone who is a CFA, a chartered financial analyst, a CIM, a chartered investment manager, chartered public accountant, chartered business evaluator. There's also the educational criteria. So someone who has a finance or business undergrad, has an MBA, which is finance focused, a lawyer who has a finance or M&A component to their practice. Or this one is actually a double criteria, someone who's taken the Canadian securities course and also meets a certain income threshold. So and actually, when you're asking about differences between the Ontario and Saskatchewan, Alberta exemption, in Ontario, there are a few additional criteria that may further expand the use of the exemption. So that's one of the areas of difference that we see between the two of them. Let's just flip back to the prior slide. Okay, so like many prospectus exemptions, there are limits to an amount that a purchaser can invest. But in the case of a listed issuer investment, so a company that's listed on a stock exchange, the limits don't apply. There's also this concept of qualifying special purpose vehicle built into the exemption, which is also not subject. Meg mentioned it, but for the purpose of today, I'm not going to go into detail on that one. We'll just focus on the applicability to a public company. Let's just flip forward to the next slide. One more. Sorry, two. Yeah, you're good. Okay, so the listed issuer investment, it applies to a company issuing the securities that has its shares listed on a Canadian stock exchange. So in this case, a potential purchaser of securities can buy the company's shares on a stock exchange. So this is in the secondary market, and there's no investment limits applicable in that context. So we're using a prospectus exemption. The purchaser is buying shares in a capital raise process, and they're also able to buy without investment limits in certain circumstances. So the issuer can't be in default of their disclosure requirements. So the purchaser is able to go onto Sedar, look at their financial statements, look at the information that they have publicly disclosed, which will aid them in their investment decision. And then the purchaser also, so the investor in this case, has received suitability advice. So if there's a dealer involved in assisting the company with a capital raise, as long as they comply with their conflict of interest procedures, they can assist in providing suitability, or that suitability could be provided by the broker of, the investment's broker or financial advisor if they have one. And just flip forward to the next slide. So for a self-certified investor who's investing in a listed company, the amount that they invest in the listed company won't subsequently limit their amount, the amounts they can invest later in the year in a private company. So for private companies using this prospectus exemption, an investor can only invest $10,000 per company and up to 30,000 in a year. But any investment in a listed issuer will stand outside of those limits. And let's flip to the next slide. So for a listed issuer, a report of exempt distribution is required. It's the same report that a company would be filing anyway. And when asked about the prospectus exemptions that are used, you just fill in self-certified investor, which is blanket order 45538. And then you add the relevant paragraph under which the investor is qualified. So for example, if it's a CFA, someone who has a CFA, then it would be Schedule A, paragraph 1. In Alberta, a private issuer isn't required to file a report of exempt distribution. Again, this is one of the differences from the Ontario exemption where everyone's required to file. And it is actually a bit of a challenge for us because we're in a test phase for this exemption, but so far only private issuers have used it, which means that we don't have any reports that are filed. So again, a lot of interest from us in talking to people who have used this exemption, getting some feedback from you, getting your thoughts on its efficiency in the market. The issuer will need to complete have the purchaser complete a statutory declaration and a risk acknowledgement, but it isn't filed with us. It's something that's just kept on file. And then for a listed company, there's a typical 4-month hold. And for a private company, of course, the hold is indefinite unless there's a liquidity event or there's compliance with another prospectus exemption. So again, I don't know if there's any other questions, Meg, if you want to break in there. To the extent we don't have time to get to them all, just put them in the chat and we'll follow up with you directly. Or we can also go into a bit more detail on some of the aspects in the February session.
I think there's a couple more, so I'll just ask one, I think, and maybe we can get back on the other one. Someone asked about the differences between the Alberta and Ontario orders. There are quite a number of differences, and some of them are pretty minor, like pretty technical, but just some of the ones that are more important for our purposes today. It could be that in Alberta, we contemplate individual investors, but also non-individual investors, such as corporations, trusts, that sort of thing. That's not contemplated in the Ontario language. There's also the concept of the listed issuer investment that Tanya spoke about. That is not in the Ontario order. So that kind of exception to the financial limits is not in that order. And then in general, there are differences between the financial limits. In Ontario, it's a $30,000 ceiling versus for us, we have a $10,000 limit into an individual issuer and then $30,000 annually. And then, like I said, there's some others like the qualifying criteria. They've added to the qualifying criteria, and they don't require a statutory declaration like we do. There's more differences than that, but we won't get into them today. And if you have questions about it, you can reach out to us.
Good. Well, thank you very much. And again, reach out, especially if you'd like to chat about this further. We would really like to follow up with you.
So good morning, everyone. My name is Jonathan Taylor. I'm a manager in the corporate finance department at the Commission. I'm here with Brenda Davis, a business analyst at the ASC. Both Brenda and I have been heavily involved in the Sedar Plus project. So we're pleased to welcome Helen Walsh, Manager of Projects and Planning from the CSA IT Systems Office. So Helen is currently leading the change management pillar on the project. So as you may be aware, Sedar Plus Go Live is targeted for June 13th of this year. And the Sedar Plus onboarding window opened on January 3rd. So given the relevance to issuers and their advisors, we've invited Helen to discuss the onboarding process in more detail. So Helen, I'll pass it over to you.
Thank you, Jonathan, and thanks to the Alberta Securities Commission for allowing me to come and speak about Sedar Plus and about onboarding, because it's a time-sensitive issue. For any of you who might have joined us at the CSA ITSO in some recent webinars around onboarding, this will be a repeat of a lot of the same material. But for those of us who've not previously joined us, I hope that it is informative. Happy to field questions here, but also I will be providing contact information at the end of the presentation. So if questions occur after this presentation, please feel free to reach out. So maybe we can move to the next slide. Thank you. So Sedar Plus is the new secure web-based platform that will be used by all market participants to file, disclose, and search for issuer information in Canada's capital markets. And I'll just note that we are in phase 1 of the Sedar Plus project. There will be subsequent phases. So in our second phase, we will be looking at renewing the platform for insider filings. And in our third phase, we will be looking at our registration filings. And I note that because I'll speak a little bit later about why we make reference to NRD numbers in some of our information. Sedar Plus is modernizing the regulatory filing systems that underpin Canadian securities regulation. The new web-based Sedar Plus platform will be easier to use, more intuitive, and more modern compared to the legacy systems, which are at their end of life and cannot respond to the modern needs of market participants. Securities regulation, as was mentioned before, falls under provincial jurisdiction in Canada. So the Canadian Securities Administrators, the umbrella organization of Canada's 13 provincial and territorial regulators, have all participated in the project, and the contribution of the ASC has been invaluable. The project is led by the CSA, and there is both input but also oversight from its member organizations. I encourage you to visit the CSA website. We do have a Sedar Plus section there, and you can learn more about this upcoming system and some of the key changes with a variety of demo videos that we have available for you, even right now. So we'll talk specifically about onboarding today, although this is the beginning of a dialogue that we need to have for everybody who requires filings to be made on Sedar Plus, because there will be any number of issues to make sure that we can transition smoothly when the new system launches, which is scheduled on June 13th of this year. So onboarding is an opportunity to participate in getting everything together, getting preparations made so that you will have access on day 1. So for the onboarding period only, we've designed a bulk submission process to ease the workload of getting all issuer data and documents onto Sedar Plus. So while some information will be transferred from Sedar automatically, once Sedar Plus is live, access management, authority, and newly required profile information will have to be entered into the system manually if you don't participate in onboarding. Before launch, you have access to our onboarding tailored process, which will be far faster than if you wait until after June the 13th. If you onboard, you'll be ready to use Sedar Plus as soon as it launches. But if you wait, it will take some time to get into Sedar Plus, particularly when the system is brand new. You will need to request access and submit your required forms, and then wait for the review process to be completed. And I've received some questions previously. How long is this review process going to take? I don't have an answer for you right now, but we will publish it as we get closer to our launch date. Onboarding is a closed-ended window. I urge you to mark April 14th because it is a deadline, and I encourage you to get started as soon as possible. So there are 3 parts to onboarding. Step 1 involves signing up your organization to participate in onboarding, the pre-launch process that we're talking about. For corporate finance issuers that use agents, the agents will perform this part of the process. As issuers, your role is to designate one agent as a primary, and I'll use air quotes, a primary, to submit your legal forms and profile information. There's nothing significant about designating a particular agent as a primary. It's just for the purposes of being able to provide one copy of your legal information and your profile information rather than having multiple copies. If you are a self-filing issuer, you should also complete this sign-up process. A link was to sign up was sent to Sedar subscriber primary contacts by the CSA service desk on November the 24th of last year. If you think you should have received that sign-up email, please contact the CSA service desk, and I do have the number and a special email at the end of our presentation. So in step one, what we require is the completion of this web form. So this is it, the registration form. You will provide contact information for the people in your organization who will be responsible for submitting the required documents and information. A few questions have come up repeatedly since people have started using this sign-up form. And I'll take this opportunity to clarify a few points. There's a one-to-one relationship between organizations with users and Sedar Plus. That means organizations that have multiple Sedar accounts today will only need one Sedar Plus account in the future. The pre-launch onboarding process is for organizations to set up their Sedar Plus accounts. This administrative process collects the new Sedar Plus legal agreements and required information. The individuals being identified in the onboarding sign-up form will be responsible for the administrative task of submitting the required documents and information on the onboarding submission site. They do not have to be current Sedar users or future Sedar Plus users. As part of the process for organizations to set up their accounts, an authorized super user will be designated for each company. The onboarding process is not intended to set up Sedar Plus access for all users. When Sedar Plus launches, if your organization participated in onboarding, your authorized super user will be provided with their new Sedar Plus login credentials. From that point, the authorized super user can add, modify, or remove users. They can also create user groups and assign issuer and filing permissions to those groups, so users will have access to the filings they need. Sedar users only need to be identified in the onboarding sign-up process if they're responsible for the administrative task of submitting the required documents and information on the onboarding submission site. In other words, you're signing up here for Sedar Plus onboarding, not for Sedar Plus itself. If you could move to the next slide, please. Thank you. Once you've signed up your organization for the pre-launch onboarding process, you can begin step two. A recent email from the CSA service desk provided detailed instructions related to the additional information that we need to collect during onboarding, as well as copies of legal agreements that must be completed and submitted to gain access to the new system. So if you were to sign up for onboarding, you would also receive this email, even though we've sent some out previously. With each occasion that somebody signs up for onboarding, they will be in receipt of instructions about what they have to do. So we encourage you to start this step as soon as possible because it may take some time and effort to complete all of the information. And now we'll get into what is it that we require. So there are some legal requirements. As is standard practice with software programs and web-based platforms, each of the CSA national systems requires formal acceptance of legal terms before providing login credentials. Sedar Plus is the new system, so new legal agreements specific to Sedar Plus must be completed to gain access to the system. New required account and issuer information is also required. Sedar Plus has new required fields for our various profiles. And additionally, some fields are optional in Sedar, but are now required. They are mandatory in Sedar Plus. So before each organization's account and issuer profile can be created, the supplementary information must be provided. So this is an example of the new electronic filer agreement. The EFA must be completed and submitted by every organization that accesses Sedar Plus to file or have their information filed in Sedar Plus, including issuers using filing agents. An EFA is required to set up issuer profiles and to submit issuer filings. If issuers use multiple filing agents, again, as I mentioned, you should designate a primary who can submit your EFA, a related filing agent authorization form, which we'll get to on the next slide, and your additional profile information. Please note that we've carefully considered and prepared the terms that are equally applicable to all users of Sedar Plus, whether they participate in pre-launch onboarding or they seek access after launch. So we will not be able to review any proposed changes, and filers are being asked to sign and submit the agreement in accordance with the version that the CSA has published. This is a sample of the filing agent authorization form. This is a new requirement which must be completed and submitted by issuers who use a filing agent. And in fact, I should mention, I think I may mention it yet again further along, but for every agent that an issuer uses, there must be a filing agent authorization form, because this agreement grants the filing agent permission to complete specific filing types on Sedar Plus on the issuer's behalf. And the last item is the supplementary profile information. So I mentioned previously that Sedar had some information that was optional. Sedar Plus now has some mandatory fields that need to be completed, and we have a number of new fields that need to be completed. Note that we've tried to keep this profile information to that which is mandatory on Sedar Plus so that the system can actually function. We have included some optional fields, but they are not optional in the sense that you have a choice whether or not you complete them. For example, many ask, do I require an LEI? And the answer is no. But if you have an LEI, we require that you tell us. So that's why you will see some optional fields appear on the supplementary forms, but you are required to fill in the information if it pertains to you. The one thing I'll say just before I speak about step 3, particularly with respect to collecting the supplementary profile information, but in addition to executing the legal agreements, this process will feel like a lot of work, but I'd like to for you to keep in mind that it is a one-time process to make sure that everyone is appropriately set up on Sedar Plus, and we will see the benefits down the road with a better system and better quality data. Step 3 involves the submission of the prepared materials that we discussed in step 2. So the window has already started as of January the 3rd. The platforms have been created for receiving this information, and they will close on April the 14th. Onboarding contacts have been sent a direct email with secure access to your organization's file submission SharePoint folder. So we are using SharePoint as a secure method for you to deliver your information to us. And if you've not already signed up and received this link, that's what will happen when you do. Once you sign up and you receive the link to this SharePoint folder, in a separate email, you will be receiving information with instructions and support for what it is that you have to do. Throughout the submission period, the Sedar Plus team will send reminders and updates. So on the next slide, we have a very quick view of what this SharePoint folder will look like for everyone who participates in onboarding. So you will notice we have various folders where you are to deposit the legal agreements and the supplementary profile information. We've also included a folder with instructions so that you can always reference them and in order to be able to complete your information. So we do have further webinars that we will be providing. These dates are a little bit subject to change. So I would ask that you look at the CSA website with some regularity to be able to sign up for our sessions and to check in on those dates. What we are finding is that there may be a need for us to combine our English and our French language webinars. And so this is what's driving a little bit of the change in our dates. So please keep an eye out for those, and please sign up where you feel it is appropriate. We will be looking at the onboarding information in a lot more detail in those deep dive webinars. And where you will find this information is on the Sedar Plus section of the CSA website. It's your go-to source for information about the transition to Sedar Plus, and it is updated regularly. We have a dedicated support team to help answer your questions and help you through the process. This is the contact information. The 1-800 number is in fact the same number that we use to reach out to our Sedar support desk and SEDI and NRD. But you will have a new selection in the IVR that will direct you to our team that will be helping you with Sedar Plus transition issues. If you take one piece of information away today, let it be this. Sedar Plus is a significant change. As is the case with any significant technology program, we can expect some bumps along the way. The time and attention and effort that we all invest now will lay the foundation for many positive changes. And we are here to help you every step of the way.
All right, thank you, Helen, for your presentation. So one question that came in, and I think it needs a little bit of clarification on when information is transferred during onboarding. So the question is, some information is transferred from Sedar if you onboard now. What information is not transferred? Also, will issuers have to file all historical data if they do not participate in early onboarding?
So to answer the first question, all information is going to be transferred from Sedar to Sedar Plus. So all profile information will be transferred. But for those profiles that do not benefit from onboarding, there will be missing information that will have to be manually entered once the application is available and if the profile is going to be used for filings. So the benefit of onboarding is that you have a more streamlined way to submit this information, and then it will appear when the system is up. So Sedar Plus will have the information that you provided as part of onboarding. It will supplement the profile information that has been migrated from Sedar to Sedar Plus, and you will be ready to make filings against that profile. And I'm sorry, what was the second part of the question, Jonathan?
It says, will issuers have to file all historical data if they do not participate in early onboarding?
Oh, I see. So the answer is no, because we will be migrating information from Sedar, as I mentioned. It's just that there will be gaps that need to be remedied before filings can be made against those profiles.
Okay, great. It looks like that was the only question that we had. So thank you, Helen, for your presentation, and back over to you, Denise.
Okay, thanks, Jonathan. Thanks, Brenda and Helen. So hopefully everybody's all keen to get signed up for the rollout. Okay, so I don't know that we have a lot more questions. We had a few. There was a question about discount rates. I think it's maybe a little technical to get into for the webinar. So our team said they'd be happy to follow up with the person who asked the question offline and to deal with that one. Let me see here. What else? Do you have any other questions here? There was a question about what kind of comments we would give in response to pervasive greenwashing. So I don't know, and again, this is maybe one that our team can follow up with the commenter, and if my high-level comments don't address it. I don't know that we've had concerns so far in Alberta anyways about pervasive greenwashing, but there is disclosure made that can be promotional or overly general. And so it's, not dissimilar to the comments I think the group made earlier about, ensuring disclosure is not promotional, that it's balanced. If, the term ESG and sustainability are really broad terms, and they cover much more than just greenhouse gas emissions. They deal with things like, human rights, child labor, health and safety, anti-terrorism, governance, or corporate governance, rule of law. So it's such a broad concept that if you're going to label yourself, to be involved in the ESG space or sustainability space, you really need to clarify what that means, because the term is just so general. I think also, if you're going to be talking about emissions and that you're going to be, the lowest carbon emitter in your space, the comments the staff made earlier about, forward-looking information and things like that, we need to understand, how are you going to do that? What's your timeline? What's your assumptions? What's the risks? Those are all, considerations that you're going to have. So what comments we're going to raise in a CD review, I think really going to depend on the disclosure that we saw, but just some high-level comments on that. I think there was also a question on, what was it? Where did it go here? On, what was it, investor relations or promotional activities? I'm not sure, where did that go? Oh, it was about social media. That's right. If the company's seeing misinformation in the marketplace in social media. So, I think that's one that you want to talk to your legal counsel about. I think that's an area. Social media is one that we're very interested in within the ASC and the CSA, and enhancing our sort of ability to monitor that on a more of a real-time basis. I think Chelsea mentioned already that is something that they look at as part of the CD reviews, but looking at that more on a real-time basis. Most of the focus is around the issuer itself and its use of social media, and making sure the disclosure is consistent and not misleading, and that if there's someone being paid to make that disclosure, that there's clear that there's information about that. But if you're seeing information in social media that's not from the issuer, that is from others, that is sometimes something that's of interest to our enforcement team. So you can follow up with them on that. And I think just be careful from the issuer perspective if you're going to be trying to respond to things you see in social media, that you're not doing sort of some such selective disclosure. So consider whether to address it through a news release or some means that is generally available, rather than getting caught up in just responding directly with the person. Is there anything? I'm just looking if there was anything else for questions. And I think there was one more that, or maybe there's two more here. There's a question about the use of safes and that affecting the ability to use other prospectus exemptions. So a safe is a simple agreement for future equity. I think, that would, in most cases, those would be securities themselves on the basis of being a subscription for a security. So we would, I guess, let's see here, what do we, so, if you are selling safes, I guess you're going to want to talk to your legal counsel about that. I don't think that they generally have an implication on, using exemptions like the accredited investor exemption or the family, friends, and business associates exemption. But if you were a private issuer and you'd sold the safes under your private issuer exemption, you may exceed your 50-person limit. If you're going to use other exemptions, for example, that have limits like the self-certified investor dollar limit or the small business financing exemption, aggregate investment limit, or aggregate capital raise, you need to really look at each of the exemptions that you're going to be using to assess them. So it's going to depend on what your other exemption is that you want to use after that. And then I think there was a question, and this one I think our staff wants to follow up with the question, the person who sent in the question about sort of the concurrent use of the Ontario self-certified investor exemption and the Alberta Saskatchewan self-certified investor exemption. The Ontario exemption is limited to issuers that are headquartered in Ontario, so that definitely affects the ability to use them across jurisdictions. And then I think whether or not it's the Ontario exemption constitutes corresponding exemption, that could be challenging given some differences that were sort of intentional differences between them. But I think probably that one's better left to discuss with the team and see if what might be options there. I am not seeing anything else. Anyone just pop up, or maybe if anybody else wants to hop on, if there's anything that I'm missing that you see that's a question. Okay. Oh, here's one. For the LIFE program, you have to be a reporting issuer for 12 months, but you also need to be listed on an Canadian exchange for 12 months. And I think that you do, but I'm just Meg or Tanya, do you guys know the answer to that one?
Off the top of my head, no, sorry.
No. I think that's what it said. But if come sign up for the webinar in February, and you'll do the deep dive on the listed issuer financing exemption, and you can hear about it more then. I think that's all. I don't see anything else for questions. So just scrolling through here. Okay, so we will follow up with people who, if your question wasn't answered, or you feel free to, if you have subsequent questions, follow up with us. So I think we will give you back a few minutes of your day and wrap up here. I just want to thank everyone for joining us today. The slides, I understand, will be available shortly on our website, and then the video of the whole thing will be available a bit longer, but they'll provide the notice. Our communications group will provide the notice, so you can get that. And do sign up for the other sessions if they're of interest to you. Thanks very much. Please complete the survey, and don't forget to include your the two code words there as well. Okay, thanks very much. And I hope you found this helpful. Have a great day.